Hello, chart watchers and Decision Point faithful. Welcome to this Monday, January 3rd, 2022 episode of Decision Point. First one of the year, lots to cover. My name's Erin Swenlin from DecisionPoint.com, and I am here with my father, Carl Swenlin, and we're going to get you prepared for this week and tell you what charts are really interesting us right now. How's everything going for you, Dad? Nice, happy new year?
Yes, and just to make everyone who owns a corporation jealous, I took our taxes to the CPA this morning.
He looks forward to that visit on the first Monday of the year, doesn't he?
Yes, they look forward to me, yeah.
They've got something to work on early. Yeah, I wish I could say my taxes were that close to being done, but no.
Well, personal taxes are going to take a while yet.
Yes, that's true. We've got to get those tax forms together by January 31st. So we've got a little bit of time to not worry about it. But yes, corporate taxes right off the bat, you've got it going. I love it. All right, well, let's go ahead and take a look at today's agenda. We're going to look at participation across the market. But that will be after we look at our market overview and indicators. This is going to be kind of our primary piece today that we'll be covering. And then I will also talk about my sector to watch as well as the diamond of the week, depending on how much time we have left at the end of the show. But without further ado, let's go ahead and get started here. I am running a free trading room on Mondays from noon p.m. Eastern to 1 p.m. Eastern. It is free completely. You can sign up on our homepage at DecisionPoint.com, but you'll get a real-time look at how I use the Decision Point process and approach to my investing and take your symbol requests, as well as look at what's going on in the market for that day. So highly recommend you come and check it out and sign up if you haven't already. Decision Point sector scoreboard. What's going on with the sectors? Currently, we only have one non-buy signal, a neutral signal on comm services. It's a beat down sector. It's not surprising to see it being the laggard after all of the bull market moves to the upside we've seen. It's still taking XLC a long time to get its footing again. And so the 20-day EMA is below the 50-day EMA, and that gives us a neutral signal because the 50-day itself is above the 200. So we're not going into a complete sell position. We're in a neutral position on that dark cross of the 20 and 50-day EMAs. All right, Dad, you're up with our charts and market overview.
Okie doke. We had an interesting day. We did not make new all-time highs, but we're very close to it on the SPY. And volume came back in, especially on the S&P total volume.
Holiday trading is done.
Yep. Okay, and then notice we've got a negative divergence on OBV. That means that volume's going out of the market while prices are going higher. It's not a good situation to be in. Also notice that the VIX, the bands are closing in, and at this rate, we may be touching that top band pretty quickly. Advanced decline line. I've been actually drawing this line across the advanced decline volume line over this top, but I think to make it a little more accurate, this is really showing a breakout in volume, and that is positive. Although it's still the fact that this top is below these tops, it's not such a great thing. Notice today we didn't actually make any progress. It looks like on the advanced decline line, but it's way up there. It's confirming these all-time highs in the last 5 trading days. Notice that new highs contracted today, even though we were very close to making a new closing high. So that's showing some weakness in the market. The Golden Cross Index for the S&P 500, 400, and 600, 80% right now, Golden Crosses. That's solid. I like that. When you get down around 7, when you get below 7, I start to be concerned. Like with the small caps here, they're kind of low. Silver Cross, improving, but it's still quite low considering that the market's making all-time highs here. This is for the S&P 400, also improving, but it's at 55%, and the S&P 600 at 53%. That's really thin. That's really thin participation.
Certainly. I know I look at anything over 50% as neutral at best, and they are rising, but they're still so low, those numbers. So that's, I don't like that either. They're rising, so maybe we're going to see something good, but we should have better participation.
On our climax analysis, we barely made 3 climactic readings here, which it's okay, but it's not, I'm not seeing a lot of enthusiasm here. And I have to say this total volume spring back was the coming back from the holiday volume. But I am calling it an upside initiation climax, because this was an exhaustion climax here, and then we rested, and now it looks like we're initiating something higher. Probably we'll know better, of course, when the market opens tomorrow.
As always with those climaxes, it does seem a little weak, but it makes sense as far as a climax.
Bias assessment. Again, it's kind of weak in here. We've got 84% of stocks above their 20 EMA. That's overbought. So, I mean, I'm thinking it can stay there a while, but it is overbought. So this upward progress we're seeing on the Silver Cross and Golden Cross could be coming to an end. Short-term indicators, Swenlin trading oscillators for breadth and volume, they pulled back. They're pulling back. So we had an oversold top, and they're losing ground. So I would expect to pull back in the short term. Gold and Silver Cross, I think we've talked about those enough for now. The intermediate term indicators, overbought, modestly overbought, and but certainly enough so that we could again see a pullback in the intermediate term. Bitcoin, it's still not looking very good. This is essentially a reverse flag formation, which is bearish. I wanted to move to this.
Yes.
Don't miss it. The 10-year Treasury yield really has made a huge jump here. And this is around the top, which insinuated that it was going to go lower a bit. And I wanted to mention too that I put this in there to emphasize that the top is rounding. It's not necessarily a support or resistance line, but when you see it breaking out here, you know this is pretty much busted. The dollar was up today. We have up about 0.62%, and a lot of volume on that for that ETF. That would have a negative effect on gold, and it was way more than just what the dollar moves. So there is intrinsically negative trading besides the negative influence of the dollar. But you notice we had a rising wedge which broke out of Friday, and we said that was a bullish move, and of course now it just reverses and it's at the bottom of this of the wedge again, and not
gold being gold.
Right, gold being gold.
It is still sitting over those moving averages. I mean, I don't like the top on that PMO very much, and that negative divergence on the OBV kind of foreshadowed, I think, what we're seeing here. But yeah, I mean, it just looks like we're going to get more, sideways, probably a little pullback to that level of support at 167 would be my thought.
The wanted to emphasize that the negative divergence I've drawn on this OBV applies to GLD. It may not reflect what's going on in the actual gold market, but for the ETF, then you would consider this a negative movement here. Oil started down, but it recovered nicely, and I'm not sure that it's reached its top yet.
Almost had a bullish engulfing candlestick. We did get a silver cross, though.
Yes, it did. I didn't catch that. I didn't get the alert on that. Did you?
I don't think that I did. Let me.
That's all right. Yeah, I got to remind myself to do that. I got gas this morning, and it's in Redlands, it's $4.89 a gallon.
Yes. God, we're going to hit $5. I think we did earlier.
Oh, yeah, I think that'll be easy to do.
Yeah. Just the inflation over here for sure is helpful.
20-year Treasury bond took a real dump today, and of course that's reflecting the opposite of what happened in the 10-year yield. So it looks like treasuries are weakening up. Okay, now I want to go to the Silver Cross, Gold and Silver Cross summary that I made. This is as of Friday.
It's not showing. I'm thinking you might need to do a new share of your desktop.
Okay. I put this together last week. I thought, gee, it would be nice to have an easy to read summary of where all the gold and silver cross indexes are on the various indexes, market indexes, and sectors. These are set up in three groups here. These are the major market indexes here. And then down here, we have the S&P 500's 11 sectors. And in the middle, these are kind of cats and dogs. We have transports, utilities, and gold miners. Now, yes, we have two utilities. This is the Dow Jones Utility Average to 15, and it's at 87. And this is the S&P utility sector, which has different stocks in it. Not all different, but obviously the list is not the same, and it's doing better. But the utilities are doing great. But now I draw your attention to the Silver Cross Index for these major market indexes. This is really sick, folks. I mean, we've got the NDX and OEX. These are the super high, um, large cap indexes, and they're only somewhat better than half of the stocks in the index have a 20 EMA above the 50 EMA. That means that half of the, nearly half of the stocks are in a correction. Now over here, S&P 500 obviously does the best, but even on the Golden Cross, now the NASDAQ Composite, notice that really sucks. 32 Silver Cross and 40% Golden Cross, but the NASDAQ Composite was near all-time highs today. Reason for that, one of the commentators on Fox Business has talked about the S&P 5, which is basically what infects the 500, the NASDAQ Composite, some of the industrials, and these two. Those stocks are in all these indexes. New York's Composite doesn't have those stocks in it. It may have a few of them, but mainly the NASDAQ Composite has all of them, I believe. But this just it's the NASDAQ Composite is near all-time highs, and only 40% are on a Golden Cross, and 32% on a Silver Cross. I mean, that's because they have, it's the weakest list of stocks out there, really. But they do have these huge cap stocks, which drag the price, the average to the all-time highs. But this is not a pretty picture. Also, in here we've got energy. It's looking very good in Golden Cross, but it's still improving on the Silver Cross. But this is not a healthy situation for the markets. It should be much better than that. It's been in the last year or so that the prices have been going up and participation has been fading. So I'm going to start putting this table in our weekly recap, and if I can get data file on it on a daily basis, I'll put it in the daily DPA. But I think this is a really useful, and I hope you all enjoy seeing it.
So I have something to point out too that I'm noticing on that Silver Cross among the sectors. The three highest, 84, 93, and 96, are the three defensive sectors: staples, real estate, and utilities. Typically, when these sectors outperform, and when they start to turn, which I think they're getting ready to, that usually is you see a big market reversal, because the defensive sectors are the last ones to do well. And so when I see those high numbers on those defensive sectors, we have to watch those sectors really carefully, I'd say, because that's when they start to fail, it's probably going to be a really difficult decline for the market overall, especially when you don't have, like you were saying, the NASDAQ, those technology stocks, when you don't have them helping press, the market up higher, and you're only, you're kind of stuck with just those mega caps to, keep an index up or continuing to rise. And I just don't see that happening that much longer. And I would also ask you a question, because I get this often, so I'm curious your answer. But a lot of people have been telling me, well, yeah, we don't have that much participation, but the Silver Crosses are rising. So doesn't that tell you that there's more, that there's this opportunity for all these other stocks to start making that move and continuing to push that index up? What are your thoughts about that kind of a look at that Silver Cross?
There are two sides to everything. Let me try to go back to can you see the chart now?
No, I'm still
No.
looking at them. Yeah. So yeah,
Okay.
you'll need to share your,
But I've, with technical analysis, there are two sides to it. It's really like double entry bookkeeping, but yes, the Silver Cross's indexes are low and improving, and they have a lot of room to improve. So that's one way of looking at it.
mhm.
But the problem is the price indexes are right up there at all-time highs. So it's a lopsided picture, which is not likely to resolve in a good way.
Right. So when price is already overbought, the market is already overbought. More than likely, even if some of these start to improve, it just is making that overbought condition worse in your mind. And so we should be, because we don't have that support right now. It doesn't seem likely that we're going to get the rest of the support. That's kind of how I've been looking at it. If the big guys can hold it up, but when they start to fail, and none of these stocks are really in a position to take over. So I think that's really the issue, right?
Yeah, and the thing is that while the averages seem to be bulletproof, they're not.
Mhm.
The slightest thing can send them south. It's just when Omicron started, you notice we had a little bit of a burp, but people got to see that no, that's not such a bad thing that's coming along. It's not going to be like the first version of COVID. So it picked up, but I mean, we're kind of in a situation where a black swan is going to send this thing
Really?
down. It's going to go down because everything, not everything, half of the stocks are not participating, and they're just, and when it starts moving out, when it starts moving out, it's going to just take everything down.
Yeah, nobody's going to be moving into a stock that's not been doing well with the market at new all-time highs.
Right.
I mean, people aren't going to be doing that. I wouldn't think. All right. Well, we have just a little bit more time, so I'm gonna grab that screen. So let's see, I've got 6 minutes here. So I wanted to talk about the financial sector. This was my sector to watch on Friday going into this week. And the only issue really is the fact that this overhead resistance is posing a problem. I am seeing more banks in my scan results and a couple of other financials when I run my Diamond PMO scans. These are the scans I use to determine which stocks look good so I can present them to my DP Diamond subscribers. And, I like the way that we are seeing some expanded, at the time, we were getting some expanded participation with a rising silver cross. But at this point, it's not looking, I know we're up 1.25%, but I'm with you, seeing that we're going to have this updated. So we'll more than likely see these participation numbers move up. But if we don't see them move up by a lot, I don't hold out too much as far as the bullishness there. One of the industry groups that I was interested in going into this week was the mining index. So this is the Dow Jones US mining index. And what I do on Fridays is I go through the sectors, and then I also look at the strongest industry groups and determine which industry group is a place to watch and to possibly be when you move into next week. I still think that mining looks good, but when I look at that gold chart and see that gold is getting ready to suffer, I suspect that the gold miners chart is looking a little bit less appetizing. Let's see here. Yep. So we got the big pullback, and obviously gold is part of the problem with that. I would venture a guess that we're going to see these numbers contract, and notice that silver cross index has turned down on the gold miners. So while this looked really good, I think that right now, not that it's all over for the miners, I just don't think they look quite as good as I thought they did when we were moving into this week. And again, gold had that very bullish breakout on Friday, big pop out of the rising wedge. I don't have it drawn on here, but an upside breakout from a bearish pattern. Things were looking great. Miners had some great participation, but seeing gold turn down, and these miners are very susceptible to any downdrafts from gold prices. So not looking quite as good as I thought it did. So I just wanted to caveat that for some of my subscribers, but also those who aren't subscribers, just to get a feel for what I do. I do have a diamond of the week, and it is actually from the industrials. I found a lot of industrials looked good last week. And so I did present quite a few diamonds in the rough from the industrial sector. I did my scans today, and this particular stock popped up in the scan results. I really like the way this chart is shaping up. So you have this nice bounce off the support level of that prior September high. Prices now managed to get above all 3, 5, 20, and 50-day EMAs. And you can see that it avoided a dark cross. That 20-day EMA was just about ready to cross below, but it managed to avoid that and is headed back up. It's still on a silver cross. And that 5-day EMA is getting ready to cross above the 20-day EMA, which is a really nice short-term signal. PMO is turning up. We don't have the buy signal yet, so this is kind of an early one that we're looking at. Stochastics are just about over 80, which is what I like to see. You want to see stochastics staying above 80. That usually means good stuff for price. And then relative strength is starting to improve on this particular stock against the S&P and against its industry group of heavy construction. So I really like the setup on this one. I'm just going to give you, I have 1 minute. I'll give you a little bit of a look at what we do in our trading room. I have a 5-minute candlestick on this right-hand side. And what I do is try and time my entries. And something like this, I like it. I go to the 5-minute chart to find out when I should enter. I look for a PMO crossover and I look for a positive RSI. When those two things are hand in hand, that's a buy point. So looking at this and coming over here, I know that it's not really ready for prime time. I need to see the PMO on this 5-minute chart turn back up, and I also want a positive RSI. So you're getting a little bit of an insight here, 5-minute candle, daily chart on the left looking good. This is kind of the setup that I like to do in my trading rooms. And if you'd like these chart styles, let me know. Erin at DecisionPoint, I will set you up with that. But highly recommend you check out my trading rooms. It'll give you a much better look on how to trade and time. That's all we have time for today for the DecisionPoint show. We wish you an excellent week ahead. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.